Hello everyone, welcome to today's video where we will be talking around Tesla's upcoming Q3 2023 earnings report. I am your host Nikos Zabouras, Senior Financial Editorial Writer at FXCM, and this video is being recorded on Friday, October 13th, 5 days ahead of Tesla's report, which is due on Wednesday after Wall Street closes. Tesla is having a very good year during which it has already refreshed its model lineup. It is pushing on the artificial intelligence front and autonomous driving, and these are some of the highlights of 2023. But the third quarter also posed challenges, highlighted by the drop in deliveries and productions. So that's what we will be talking about in today's video. However, before we begin, please read carefully through the risk warnings and the disclaimers. Once again, please read carefully through the risk disclaimers and the warnings, and bear in mind that anything discussed in this video does not constitute investment advice and should not be construed as such. Let's give it a few more seconds before we begin. Okay, let's get the ball rolling. As we said, Tesla is having a great year, pushing on multiple fronts, including artificial intelligence and autonomous driving. And but on the other hand, there are also adversities highlighted by the drop in delivery and productions for the third quarter, which it released earlier in the month. So we're gonna start off with what has been good this year, then we're gonna move on to what has been bad, the difficulties, and we're gonna talk about what are some of the themes that we will be paying attention to during Wednesday's incoming quarterly report, and of course the earnings call, which is always a major focal point. So Tesla in September launched a refreshed Model 3, which has been on the market for 6 years. And the new model, the revamped model, is initially available in China and Europe, but not yet in the US market, at least at the time of the recording, but it will be perhaps within the year. Now, of course, it's not about the Model 3. The main expectation, the main anticipation is around the Cybertruck, its futuristic pickup truck, which has been subject to multiple delays. Although Mr. Musk had earlier in the year hinted at deliveries which could begin within the third quarter elapsed without a launch of this Cybertruck, but he has said that the first models will be handed over within the year. So we will be looking forward to any more news around that. The delays are partly because of the unique design of the Cybertruck that has created manufacturing difficulties. And of course, Tesla also works on a more niche roadster, which has been pushed back to 2024, and it's also potentially moving towards a cheap electric vehicle. So given Tesla's aging lineup, it needs a refresh. Its newest model is the Y, the SUV called Y, and it's also its most successful passenger car, being on the roads, of course, more than 4 years now. The Model Y was the best-selling car in Europe and China in the first half of the year, not electric vehicle, car overall. Now, of course, Tesla has a broader vision for a world without fossil fuels and pushes on multiple fronts, including fast charging. Of course, we're talking about its charging protocol now, but we also use it as a reference for its broader aspirations, which were also evident in the Master Plan 3 earlier this year. It tries to push forward an electric future, and of course, a sticky point right now is the charging network, its availability, and how fast cars can charge. Tesla is at the forefront of that effort, and it's moving towards conquering the US charging market, since its North American charging standard is being adopted by many auto giants. Ford and General Motors were some of the first, and just a few days earlier, Korea's Kia and Hyundai also announced that they will plug into Tesla's network. Tesla's network is more widely available. It has more than 50,000 superchargers worldwide and is also considered more reliable than the CCS standard. So again, this could be a very important development for the market and for Tesla, because many surveys show that range anxiety is one of the factors that prohibits buyers from from buying electric vehicles. So a broader and fast charging network is crucial, and Tesla can benefit from becoming the standard. Now, of course, part of Tesla's broader aspirations, go far beyond electric manufacturing of electric cars, but it is committed to being at the forefront of artificial intelligence development, and has actually manufactured its own supercomputer, the Dojo, which it will use along with NVIDIA's infrastructure. And this, of course, can help in various tasks, including manufacturing and supply chains management, also extending to humanoid robots and more. But most importantly, it helps Tesla with progress on autonomous driving and robotaxis. This is something that can unlock tremendous value for Tesla, autonomous driving, full self-driving mode, and companies with vast amounts of proprietary data, such as the one that Tesla owns from its cameras and sensors on the millions of cars it has on the roads. Companies like that will have an edge in the AI era, which of course is the main battlefield in Silicon Valley this year. Now, we're not gonna talk too much about Tesla as an AI player, because we have analyzed that further in our recent 3+1 AI stocks video, which you can see at the top of your screen, a link at the top of your screen, so you can follow that for more. Having covered some of the positive things, let's say, about Tesla this year, now let's go ahead and look at the bad, some of the adversities. Of course, the first is deliveries and production. which you can see on your screen on this graph now. Tesla is already out with the third quarter figures, which disappointed since deliveries fell around 6.5% from the previous quarter's record highs. Again, as you can see on this graph, and this actually marked the first sequential decline in more than a year. Production also dropped on a quarterly basis, but on a positive sign, the delivery output gap that had troubled the company over recent quarters inverted, with deliveries exceeding productions. These are generally roughly equal, but we have seen output being higher than deliveries over recent quarters in a sign of weak demand. Now, Elon Musk, of course, had warned of lower output in the last earnings call due to plant shutdowns for factory upgrades. But in any case, the firm reiterated the 1.8 million volume target for the year, which is not unrealistic. It will need fewer cars in Q4 than the ones actually produced in the record second quarter. Now, another potential problem is around Tesla's profitability. The company has been facing these demand issues, as we mentioned, and an adverse external environment due to high inflation, elevated interest rates, as well as economic uncertainty, which are, of course, problem for the broader industry, not just Tesla. The drop in deliveries illustrates that fact, but the company has seen an opportunity to chase market share via multiple price cuts over the past several months. Now, this, however, has resulted in lower profitability, and let's watch a graph which is telling how the margins have evolved. In the second quarter, operating margin fell below 10% for the first time in over 2 years. And has been squeezing for the past 3 quarters, as you can see on the chart. And so has similarly, we have seen gross margins also following a similar pattern. Having said that, Tesla's margins are still better than traditional OEMs, traditional automakers. And of course, rival startups, most of them are unprofitable. So definitely Tesla has the ability to withstand lower margins in its effort to capture greater market share in this still challenging environment. Of course, the EV King is facing increased competition from startups and auto giants alike. We already talked about the delivery figures for the second quarter, and it was able to stay ahead of Chinese behemoth BYD in China, but they are now neck and neck in terms of pure battery electric vehicles. In terms of total electrified vehicles, BYD is ahead. The Model Y was the best-selling EV and car overall, but BYD sold triple BEVs overall. European behemoths such as Volkswagen, Mercedes-Benz and others are also making progress in electrification, and Volkswagen has a very interesting lineup of purely electric vehicles, and has actually announced a very cheap model for 2024, something on which we don't have updates yet for Tesla, although it does seem to be working towards that. And of course, it has made multiple price cuts that have lowered the entry threshold for buying a Tesla. We also talked about the Cybertruck, which essentially created the segment a few years back when it was first unveiled to the world. But as it plans to enter the market, it will face a very different reality, because we have other makers out with electric pickup trucks, and of course Ford with the F-150 Lightning and Rivian with the R1S, both of which have also received critical acclaim and have been named trucks of the year for 2023 and 2022 respectively by Motor Trend. And of course, these adversities for the third quarter and in general have been in the unfavorable environment that we briefly described, of elevated inflation, tight monetary environment, and the Fed, of course, pushing the higher for longer mantra, and we also have economic uncertainty. These have all weighed on Tesla's stock in the third quarter. And here we can see the stock chart. After the rally in the first half of the year, TSLA declined by nearly 4.5% in Q3. This does create risk of more pressure, but still gains more than 100% this year. This pullback has been shallow and remains above its 200 days EMA, the black line that you see on the chart. So at this stage, the bullish bias is intact, and of course August and September are generally poor months for Wall Street, but the fourth quarter is usually better. So we're not gonna talk too much about the stock. It's not what we're trying to do with this video. So let's go back to our presentation. Now, having also outlined the bad, what I want to do now is move forward with sort of a recap of what we talked about and with what to expect from the Q3 report. Some of the focal points, some of the things that I will be looking closely at the upcoming report, which is due on Wednesday, October 18, after Wall Street closes, and of course the subsequent earnings call, which is always interesting, as Elon Musk always has important things to say. Of course, financials will be in focus. We already talked about the tighter margins in a trend that could continue in Q3, given the drop in sales and lower prices. Margins are still strong, and markets appear cool around the lower profitability, but concerns could begin to mount if this carries on. Revenues, on the other hand, surged nearly 50% year over year to record highs in the previous quarter due to growth in vehicle deliveries, but now a slowdown is likely. Revenues are set for new record highs at 24.53 billion for the third quarter in the upcoming report, according at least to investing.com forecast. As we said, Tesla has been slashing prices for the past several months. Its cheapest model in the US, the old 3, not the refreshed one we talked about, not yet available there, starts at around $39,000 in the US and well below $30,000 with the tax credits. So it's not cheap, but it's actually a very good price, we would say. Now, given its market lead and margin, it has the luxury to do that, but for how long? So we will be looking chasing this price cut strategy. But we will be looking for any updates around these pricing strategies. If it gives us any hints as to his intentions, is it going to continue, is it going to stop? So that's definitely another focal point. And then, of course, we have the Cybertruck timeline. As we said, deliveries have not yet started, but they're still expected within the year, at least to Mr. Musk's previous commentary. He has been hyping up the vehicle, of course, and let's listen at what he had to say during the last earnings call in July about the Cybertruck.
I think we'll be making them in high volume next year, and we will be delivering the car this year. The demand is so far off the hook you can't even see the hook.
Okay, so that was Mr. Elon Musk. Two separate references there combined in one. He talked about strong demand and the delivery and production, volume production is expected next year in any case, higher output that is. And in remarks back in May, he had said that Tesla will likely produce 250,000 Cybertrucks in a year or maybe even more, of course, after the initial ramp up. Of course, it's not only about the Cybertruck. We will be looking for any updates around the new manufacturing process, which was outlined earlier in the year and could allow for the production of a cheaper model, and which was, of course, part of the initial master plans many years back, and any other updates around refreshed or new models. And, of course, we already touched on that earlier, autonomous driving and artificial intelligence. And of course the robotaxi as well. Mr. Musk believes this project can drive profitability and for the company. And let's actually hear what he said again in the July earnings call.
The short-term variances in gross margin and profitability really are minor relative to the long-term picture. Autonomy will make all of these numbers look silly.
Okay, so that was Mr. Elon Musk. He said essentially that autonomy can unlock tremendous value for the company. And he also said that full self-driving will be better than human in separate remarks by the end of 2023. He's generally been overly optimistic around full self-driving mode, and it's also not clear exactly what he means by better than human. Tesla is currently on level 2 autonomy, similar as some other manufacturers, with level 5 being full automation with zero human interaction or attention. However, there's no regulatory approval around such a thing yet. So that wraps up today's video. Tesla, once again, just to do a recap, is having a great year, but there have been adversities, especially in the third quarter, highlighted by the poor deliveries and production figures. And of course, the external environment remains unfavorable. However, Tesla is still the EV king and pushes on multiple fronts around electrification and around artificial intelligence, which can help it progress autonomous driving and unlock value for the company. That's it from me. Thank you for joining me.